Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And it's time for episode 41 in my monthly series where I'll give you a quick overview of the Canadian and the US stock market in the past month, but more importantly, give you an overview of the top high-yield funds, give you an overview of the landscape, if there's any changes or big news regarding any of the funds on both the Canadian and US market, of course, so we could try to determine if there's anything that's undervalued and a good buying opportunity this month. So this episode is for August of 2023. I am doing it filming it on July 21st, a little bit earlier than usual, because I have that upcoming trip to Montreal, so I need to film it a little bit earlier, and hopefully I will see you in Montreal and you book your tickets. And if you need more information, you could always check out the shorts video I did on that. So in case you didn't know, Blossom is having an event. They just did Calgary, they're doing Montreal, I believe in Montreal is August 3rd, and they're also coming to Toronto on August 1st. So you could book your tickets. I'll put the links in the video description below. So if you're new to the channel, welcome. My name is Adrian. So the primary objective of my income investing strategy and this channel is really to teach you on how to generate relatively safe, consistent passive income forever. And one important aspect, like I mentioned, of my investing style is really to keep investing over time so you could dollar cost average and try to find what's undervalued in the market, get the most bang for your buck. So remember, I'm not against the more mainstream growth or dividend growth styles of investing. These strategies also work very, very well long-term. They're more designed for investors looking for that are prioritizing total return or dividend growth, whereas my strategy really focuses on maximizing cash flow. So let's start the video. So before we check out the market and I show you the lay of the land on both the Canadian and US side, I first like to thank the sponsor of this video, myself. I am the sponsor of the video, so there's no official sponsor this month. But in case you didn't know, I just recently launched YouTube memberships where you could join. And if you're interested, you could check out this video by clicking on the join button, which should be right here near the subscribe button. So if you click on the join button, you'll get this pop-up. You could watch this 3-minute video to know what it's all about. So basically I have two levels: the PII Inner Circle, which is only $3 Canadian a month or $1.50 US a month, and the PII Inner Circle Plus. So what kind of benefits and perks do you get? Well, you get exclusive members only video, and I'm excited to recently launch the second exclusive video where I unveil my dad's RIF account and show you how he's making 15% yield, living off his interest until 91 years old. Pretty incredible. So that is the second exclusive video. There's also members only live streams. My plan is to do at least one exclusive content, either an exclusive video or a live stream where you could submit questions in advance every single month. But that's not all. There's also the weekly opportunity report, which is actually a condensed version or a weekly version of this video, the picks of the month. So you don't have to wait a whole month to know what's undervalued, or what I think is undervalued rather. PII Inner Circle members where we'll get a weekly opportunity report every single Friday. There's also real-time stock trade alerts. I know you guys love my monthly portfolio unveil videos. If you don't want to wait a whole month to know what I bought and sold, if I sold anything, by becoming a PII Inner Circle member, you know the day of whatever I do, whether I buy or sell something. Then there's a second level, PII Inner Circle Plus, where you will get 30% off coaching sessions. I do offer a one-on-one coaching session. Right now, the price is $300. So if you just become a PI Inner Circle Plus member, you get 30% off a session. I know many of you like to, check in once a year, book a session once a year. And of course, you also get, as a Inner Circle Plus member, priority answers during member live streams where you'll be able to submit your questions in advance. All right, so let's look over the market in the past month. Again, I am filming this on July 21st, so it was relatively great. Both markets, you see the TSX Composite Index, the market's not closed. It's up 4.32% in the last month. S&P 500 is up 4%. The NASDAQ is still going up. I can't believe it's at 15,496. Pretty crazy here, the NDX. So the markets have been doing really well. You might be asking yourself why. They're still talking about recession, there's still inflation, interest rates are still going up. Well, remember everyone, it's because the markets are forward looking. The stock markets are approximately, this is my opinion here, 6 months ahead. So they're always looking ahead, and ahead seems to be very, very positive in terms of the market conditions. So I mean, inflation is cooling off. I think that within, a couple more maybe interest rate hikes, then they'll probably pause and stop it. And who knows, when they start cutting the interest rates eventually, that's always good news for the market. So let's take a look at the lay of the land in the Canadian space now. Of course, we're going to start with my favorite types of funds, the leveraged all-in-ones, HYLD, HDIV, HDIF, BMAX, EIT, etc. So when it comes to HYLD, nothing major. No changes whatsoever. It's still growing in AUM. It's about to hit 500 million, which is really, really cool. So yeah, no changes whatsoever on this one. As you can see here, the performance compared to the S&P 500 is disconnecting. It's completely normal because it's the S&P 500 really took off in the last month or two. But I have no issues whatsoever with HYLD. Solid dividend yield of over 11% still, even with the recent stock price increase. Then you have HDIV, its counterpart, which tracks more the Canadian market. HYLD is more the US side. Doing really well, still outperforming by far the TSX 60 or the overall Canadian market. You see that here. And the biggest news with this one is that they did add their newest UMAX ETF in here. Of course, we expected that. They also added HUTS. So HUTS is like the non-covered call version of UMAX, but it is leverage. It's kind of like what the HFIN is to HMAX. So I really like that what they're doing. I'm sure by next month or the next update, you'll see the ZWU gone most likely. Why pay an extra fee for ZWU for utilities when there's UMAX and they have their own ETF. So it greatly not only reduces the fees of HDIV, because if it's a Hamilton product, they're not going to charge another management fee, right? There's no double dipping, but it's much higher yield. So HDIV's 2-year anniversary is coming up. I will do a video on it, and hopefully we'll also get a slight distribution increase as well. I strongly suspect it will come for HDIV. So we'll see. My bet is either 14 cents or 14.5 cents, which is excellent. HDIV has been picking up lately as well because it has a lot of US stuff. They just added their travel ETF in here. They rebalanced it as well. The US banks have been picking up, and one of the ETFs is the US banks. You see that they're relatively even here. They recently rebalanced it. The travel ETF is doing fairly well as well. So HDIV doing really well lately. Still over 10% yield. It was very close to 11, but the price went up and the fund keeps growing nicely. These are just, of course, only the Harvest covered call ETFs. It's an all-in-one Harvest covered call solution. I absolutely love Harvest. Can't wait to meet them in Montreal. You also have BMAX, the Brompton one. No news here. Don't see the next set of 3 months dividends declared, but I have no doubt that they're going to declare their regular 10 cents a month for the next 3 months here. EIT still the king, doing very, very well. Always at a slight discount, like a 2% discount. You see that here. It's worth $13.26, but you could pick it up for $12.98. An absolute monster, an absolute king. Look at these performance numbers in the last 10 years, over 10%. I mean, these guys really are stock pickers. Don't think there's covered calls on this, but there is 20% leverage. I do consider this an all-in-one income-oriented fund. It is income-oriented. Remember that, you could check out the top 25 stocks here, and there is still no technology stocks. So this is pure value stocks, a lot of financials, energy, and healthcare. Those are the top sectors. As you know, Canoe is based out of Calgary, I believe, and they're very bullish on energy. So there's a nice chunk in energy in there. And new ETFs from Horizons, leveraged covered call ETFs, very exciting. And these are really game changers. If you haven't checked out my new a recent video where I review all these Horizons ETFs. There's actually 6 new ETFs total. 5 of them are leveraged. 3 out of the 5 leveraged ones are leveraged covered call ETFs, including USCL, which is basically USCC with 25% leverage. And you also have CNCL, which is CNCC with 25% leverage. So I do consider these kind of overall core diversified positions. USCL is like the overall US market. CNCL is the overall Canadian market. They haven't declared their distributions, but by the time this video comes out, they will have, and the yields are going to be extremely exciting, about 12.5% estimate here on the Canadian one and 14% estimate on USCL. So these will definitely be added in the rotation here in my monthly picks because they're really good core holdings. They're leverage, cover calls, and they capture the overall market. Now moving on to more the sector specific ones. Let's go with the Canadian financial space first. So you have HMAX going strong, been picking up every day. I've been seeing these Canadian banks going up. And again, I think it's because the markets are forward looking. Great time to pick up Canadian banks, Canadian financials, no matter what vehicle you want to use. You have HMAX, which is at the money cover calls on 50% of the portfolio. There's also Bank, which I really like, recently had a big increase to their distribution, over 14% yield. This one is index based, has 10 companies though. Just like HMAX, very, very similar companies, except it's less covered call coverage, up to 33% instead of HMAX 50%, but Bank does have 25% leverage. And we got a new one in the rotation, BKCL, which is just the 6 banks, covered calls and leverage. And of course, the underline for this one is BKCC. BKCL is just BKCC with 25% leverage, but BKCC just recently had a big distribution increase, which means here, check out this yield estimate, over 15%. So BKCL is now going to be the highest yielding Canadian financials ETF, dethroning HMAX, basically. So yeah, I like all 3 of them. I own all 3 of them now. You'll see that in the next portfolio unveils. Of course, if you are a PII Inner Circle member, you would know already how much I would own, but I like all 3. It's really up to you to choose which one you like best. BKCL is a little bit different from the other 2 because it is only the 6 banks. It doesn't have the insurance companies. Next is energy. So ENCC is my go-to. I really like ENCC because it has the top 10 energy companies in Canada with cover calls, no leverage. They don't even need the leverage to attain over 14% yield. Really, really good. These are, have high dividend yields to begin with, plus they're more volatile stocks, so it's very easy to get over 14% yield here. But you also have UMAX, which actually has the pipelines. They don't have the oil producers like Suncor. So let's say you like energy utilities, you don't really like the oil and gas producers, you don't mind the pipelines. UMAX is now a great option, but don't forget UMAX was recently added in HDIV. It's actually growing quite well. It's already at 67 million, and actually has the railroads too here. So it has the railroads, the telecom. So think of it more like a more conservative ETF versus ENCC if you're looking into Canadian utilities, and energy, which is a big part of the Canadian market. Finishing off with the ETFs, you have the crypto ones, we have the purpose ones, which we're still waiting. The whole thing with Bitcoin now is that BlackRock going to get their ETF approved, that spot Bitcoin ETF approved. If you haven't checked out my recent Bitcoin video, make sure to check it out. So now is still a good time to get these. I find both of them are over 12% yield. Both the Bitcoin and Ether ones are 12% yield. They just declared another round of dividends, the same. So it's about 4 months in a row where they have the same dividend, which is always good, always appreciated. So doing really well, doing exactly what they're supposed to do in case you are interested in crypto. Last but not least, you got the yield shares, which I strongly suggest you watch the recent video. I did a Q&A with Mr. Nick Murch. He's back on the channel to discuss Tesla earnings, Amazon earnings, and Google earnings. Tesla just released theirs. The stock went down 9%. So does YTSL, and that's why it's at almost 13% yield now. So I think it's actually a good time to pick up some YTSL if you're interested. I think Tesla is up slightly a little bit. So always good to pick this one up when Tesla gets a big shot, a big downward swing. So almost 13% yield to invest in Tesla. Monthly income, really, really cool. They haven't missed the dividend yet. It's always been the same dividend here. Really, really awesome. And again, check out that video because we discussed the cover call strategy of these funds, of the yield shares. They also have, don't forget, Amazon one, Google one, almost near 8% yield on those. So really cool way to get access to your favorite tech stocks that don't have dividends, and you get really a nice monthly dividend on these. ETFs are done. Let's move on to closed-end funds and split-share funds, starting with the Brompton ones. Of course, the big news right now, it's Friday. Brompton updates their split-share funds every Friday. DGS is finally back at $15 unit now, 15.10 to be precise. I actually think that for a split share fund to be able to pay the 10-cent distribution, it needs to be 15.10, not 15, because it has to be 15 plus it needs that 10 cents to give out. So it's actually 15.10. So I really expect Brompton to declare their dividend. They haven't done it yet. They usually do it right at the end of each month, so probably by early next week. But we should get a DGS dividend, which is great news. I know you've been waiting. A lot of people have been worried. GDV also really good pickup right now, only a 16% premium. I remember seeing this at 25, 30, 35% premium. So GDV has been put under pressure lately. The NAV and the stock price is narrowing. So I'm actually thinking of picking up some GDV really soon. Everything else, even LBS and SBC, the premium percentage is narrowing. But of course, now with the financials, we have a lot of great non-split share fund versions. DFN right at $15 NAV here, unit NAV. So they're really, really close. You could see that, in case you didn't catch it, they actually updated it on July 18th to tell, reinforce or calm people down, I guess, to say that, it is still over 15. So will it pay? I'm not sure if it will pay. Let's see if they declared it by chance here. News July. Yeah, they did. They did declare it in July 18th. So it looks like they did declare the DFN distribution as normal. FTN has been doing well as FFN, of course, because financials have been going up. So the new FTN is over 17. That makes me happy. Still trading at a big premium. BK still trading at a big premium as well. And last, but of course not least, is the middle field ones. You have ENS and RS. And of course, just like last month, I think now is a phenomenal time to get into real estate. Real estate has been put under pressure because of interest rate hikes, and the premium is about 15 or 16% on RS. So it's a really, really good time to pick some up. And I'll give you a little preview, a little hint. I just recently picked up $5,000 worth of RS, and I might pick up another $5,000 worth of RS. You guys know that RS is my favorite real estate centric fund on the Canadian market. So now let's take a look at the US market together, see what's going on there. America, let's check out what's going on in the income world in the United States. So covered calls, not super popular, not as many as in Canada, and they're very diversified. It's like they're mostly all index based. So of course we're going to start with QYLD, RYLD, XYLD. Unfortunately, at the time I'm filming this, we're not going to know what the latest dividend is for all three of them, but I do expect them to maybe stay the same or go up slightly. Remember that they do at the money calls on the whole portfolio, and they only give out maximum 1% or half of the distribution. And if you look at the updated covered call report, you could actually see the latest stats. So you see in June, the volatility did increase a little bit. This is QYLD, by the way. You see they made a 2.43% premium. So as long as it's over 2, we'll get a typical 1% payout. So this here is XYLD. You see that it's not even 2%. Volatility is really low. So instead of giving 1%, they're going to give out half of the 1.6. And then RYLD typically always 2%, except for last month where they gave out a smaller dividend, but now it was 2.26. So we'll have to wait and see. But QYLD, RYLD, they're all doing exactly what they're supposed to be doing. Make sure to check out the two videos I have where I explain these in detail, the covered call strategy in detail, and also interview the director of the income suite at Global X. We talk all about QYLD, RYLD, and XYLD, and remember that these three are all in HYLD. Of course, there's JEPI and JEPQ. I know a lot of people prefer these over the Global X one. They're just, same kind of same indexes, NASDAQ and S&P 500. So JEPI would be compared to XYLD, and JEPQ would be compared to QYLD, but the covered call strategy is different, not as aggressive, but volatility is lower, so you see the distributions have come down a little bit. Unfortunately, at the time of this filming, the August dividend is not out yet, so stay tuned for that. But we do have a new player in town, SPY, which is JEPI's and XYLD's competitor and has been beating both of them. This is the NEOS S&P 500 High Income ETF. Very excited to announce that I did interview the co-founder, portfolio manager of SpyEye, Mr. Troy Cates, and that video is coming up in the next couple of weeks. SpyEye has been doing absolutely phenomenal. I think this is definitely one to consider if you're building a foundational core, covered call portfolio in the US. If you're American, I think SpyEye is definitely giving JEPI and XYLD a run for its money. You guys all know I love SVOL. SVOL has been destroying everybody lately. Consistent 32 cents distributions, very, 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 very high yield. It's growing very rapidly, over $350 million now. Pretty low management fee. Look at these performance numbers. I mean, it's been destroying everything, including the S&P 500. And I just want to advise you that they recently came out with a video of like 35 minutes. They do a deep dive into SVOL. So in case you're a little confused, hopefully you don't get confused after watching this, because it is a bit harder to understand this fund, but I strongly suggest you check out this latest video. If you're skeptical about SVOL or you just want to hear from Mr. Shailesh Gupta, the guy who actually manages SVOL, which he's been on the channel twice to explain. You have the BlackRock iShares covered call ETFs on fixed income that I really, really like. I think these, I typically hate fixed income, but I think these could be really a solid part of a foundational portfolio, along with, the ETFs we just covered. You have TLTW, which is cover calls on government bonds. You have LQTW, cover calls on investment grade or high quality corporate bonds. And then you have the one I own, HYGW, cover calls on high yield corporate bonds. All of them have declared slightly higher distributions than last month, which is great. But remember, these distributions will vary they will fluctuate. They will fluctuate a lot. These guys are actually coming up on their 1 year anniversary soon, so we'll actually get some performance data, but it looks to be fairly flat. And I think HYGW, by the way, is doing the better of three of them. All right, that's foundational stuff. Moving on to more exciting stuff. Yield max ETFs, they've all declared big distributions in the last distribution round. I am in constant contact with Jay, the guy who manages these, and they are trying their best to get out a bunch more yield max ETFs. Of course, they can't share with me the precise dates, but they told me to stay tuned because there are announcements coming out. So these are awesome secondary positions to have. Really get your favorite volatile stocks with huge monthly income. We're talking 50-60% yield. Even Apple had a massive distribution. A boring stock like Apple, I think it's like 30%, 38% yield or something like that. 34%. Can you imagine that? Pretty crazy. I can't wait to follow up and talk to them again, have them on the channel. You also have Clip, which kind of does the same thing Yieldmax does, but it's on KWeb. So this is also the KWeb ETF. I did a video on this. I interviewed the fund manager. Growing very rapidly as well. Almost 51 million in net assets. I love Clip. I own, just recently bought another $1,000 worth. So really cool, interesting option. So this is the ETF landscape of what I feel are the best, income-oriented covered call funds. But of course, in the US, there's a humongous closed-end fund market. And, I'm not going to go into details on there's a million of them. But I'll give you, the overview of the all-in-one options where you could capture the whole closed-end fund market. So, of course, you have YYY. You have an ETF called CEFs, closed-end fund S. These are actually ETFs that invest in many closed-end funds. No changes in terms of distributions as far as I saw. I remember when you're looking at YYY, this is the most important number to see. What is the average discount percentage on the 45 closed-end funds that this ETF has? And it's 7.48. Saba is actually, in terms of performance, it does really, really well. Distribution's a bit lower at 9. But then you have Riv, who just update their fact sheet. So Riv would be definitely still my pick out of the 4. Riv itself is trading at a 7.69% discount. But if you open this fact sheet, which was just updated, you see that the average discount of the closed-end funds inside of Riv is 11.6. So you're kind of getting 11.6 plus 7.69%. Add those two, and that's the discount you're getting. So really good time to pick up anything in the closed-end fund space because they mostly focus on fixed income, which has been getting killed with the interest rate hikes. So, of course, we always want to focus on what's the ugly duckling. And right now in the U.S. overall market, my opinion here, I still think it's the closed-end fund space. And last but definitely not least, you have the most aggressive and riskiest one out of the 4, CEFD, I think I'm gonna buy some more soon. It's been hovering in the $19 range. Yield is between 12 and 13%. So last but not least, I'm definitely not going to forget this time, CLM. CLM, what's interesting is that the latest net asset value as of the 14th of July, it's $7.01. So the last dividend was based on this year's dividend rate was based on a $7 NAV. It finally passed $7, which means by the end of October, because they reset the annual distribution, 21% of the NAV on October 31st, that's the dividend rate for the following year. So if CLM's NAV stays at $7.01 on October 31st coming up, the dividend will actually be for 2024 slightly higher than 2023. Hopefully this still keeps going up. This is because technology stocks have been going up, and CLM mostly has the overall US market, which is mostly technology stocks. So the premium is not so bad, just under 20. So is it a good time to buy CLM? I would say it could be, but for sure if this number hits 15. And by the way, still no annual offering, right? They didn't do their annual rights offering that they usually do. Maybe they'll skip it this year. Maybe the premium is too small for it. I'm not sure. But anyway, that's CLM. So that's the overall US landscape. It's kind of hard to say what's undervalued because a lot of these funds is kind of like the overall market. But I would definitely say if you're really opportunistic, you don't have much closed-end fund exposure, fixed income exposure, RIV is pretty good. The 4 closed-end, all-in-one closed-end funds are a really good option. But that's mostly fixed income, and now you have these 3 ETFs, which the structure is simpler. They're an ETF structure, less fees. So we'll have to see what happens. So that's it for this month. We'll do this again in next month as well. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, PassiveIncomeInvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us, or more personal stuff. when it comes to our life here in Panama, and there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.